The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to today's webinar on MyCP. I'm your host for the webinar, Sean, joining you from Houston, Texas. I hope you are all safe and healthy. Please let us know which place you are joining in from. Before we proceed, I'd like to thank all of you for coming to the webinar and choosing MyCPE as your continuing education partner and supporting our social cause of one credit, one meal, wherein we donate one meal for each credit you earn on our platform. Just want to quickly make sure that you're able to see the screen and listen to me loud and clear. On the screen, we have Tipalti. In case you lose your audio during the webinar, you can still dial in through your phone. The dial-in details are available into the audio tab of GoToWebinar control panel, and we have given to you the same in the chat. If you have any technical issues related to the webinar, feel free to reach out to us in the question panel or chat panel or email us at support@my-cpe.com. We would try and help you. We would be able to provide you certificate if you are logged into the webinar for the entire duration of the webinar and answer all the polling questions. You'll have 1 minute of time every time. You have 1 minute of time every time when you have a polling question. Please stay attentive during the webinar, and this is an interactive webinar, so feel free to put your questions in the question panel, and presenters would be happy to take them on the go. Today we are joined by a team of Tipalti, Alicia Diamond, and Anand Mishra, and along with that we have Mark. Hey Mark, you there?
I'm here. Thank you so much for having me, Sean.
Thank you in advance for presenting today, and I will hand over the control to you, and you may please proceed.
Thank you so much, Sean, and thank you all for joining us today. So let's face it, it's been a tough year for businesses, but for many businesses, the toughest test actually lies ahead: how to return to growth in this challenging economic environment. This, my friends, is the time to rethink the way your business operates. Those who step up their game, well, you're going to be better off and far more ready to confront the challenges and opportunities of this new normal that we're living in. And one area that businesses should take a hard look at is their accounts payable function. Yes, I said accounts payable. The way a business pays its suppliers can play a big role in helping your business survive and even thrive in the pandemic economy. Accounts payable leaders, well, we've got to find ways to ensure that work from home productivity is maintained. We need to find ways to apply smart cash flow controls. We need to modernize our processes, and we need to mitigate risks. And to do all this, it's going to require a fresh approach to the way that we approve invoices and pay our suppliers. And that's what we're going to show you during today's webinar. Before we do all that, we wanted to start with a poll question, which is about to be displayed on your screen. We want to know, which of the following is your biggest accounts payable challenge? Is it disruption to established business processes? Is it longer cycle times? Is it a lack of visibility into cash and corporate spend? Is it inadequate employee accountability and oversight in this new normal? Or is it concerns about compliance and fraud risks? Take a moment to respond to the poll question now displayed on your screen. And we're going to discuss the results in just a moment. So Anand, where is it that most accounts payable processes fall down in this new normal that we're living in?
So Mark, that's a great question, right? Depending on where you are in terms of automation, or in many cases lack thereof, these could stack up differently, right? I mean, the COVID-19 situation has worsened the situation further, to say the least. So if that has proven anything, the current pandemic, it's that cash flow management is critical for organizations to survive. I mean, processing invoices, payments, or remittances in a timely manner can becoming an overwhelming burden that can lead to a much longer cycle time with a lot more higher costs, right? And with much of the country working remotely, imagine having employees go to an actual location to physically touch thousands of pieces of mail, opening the envelopes, processing these payments, presents a number of risks per se, right? So essentially, to survive with the existing challenges and to meet the future challenges post-pandemic as well, it's imperative for organizations to make an investment in digitization and automation of the AP function, to say the least.
So let's see how our attendees responded to our poll question. We asked them which of the following is your biggest accounts payable challenge. 43% of the folks on the line said it's been disruption to established business processes. 23% of you said longer cycle times. 13% said inadequate employee accountability and oversight. And another 13% said concerns about fraud and compliance risk. Does this surprise you, Anand?
Not at all, Mark. I mean, like I was saying earlier, it's one of the key things that the COVID-19 situation has done is basically disrupt the established processes and procedures, right? With most everybody working remotely, partial automation or lack thereof can have significant disruption in your operations and how you manage currently. You talked about initially work from home. What are the compliance? What are the controls that you have in place? Do you have automation to process these invoices for approval processes? On the remittance side, how do you manage that? Are you sending out paper checks? So these are all a part of the processes that normally people would do in an office situation, which is totally disrupted in the current scenario.
Let's face it, accounts payable departments weren't operating at peak efficiency or effectiveness before the pandemic. Is it become apparent to businesses that they're going to need to solve this problem in this new normal, Anand?
Unfortunately, it had to be the situation, Mark, to kind of push people towards automation. But it was happening to some extent. Like I mentioned earlier, it was partial automation. People would just maybe do an OCR or process invoices, but on the payment side, it would be manual. But you have to look at it end to end, and this is pushing it to the next level. And we've seen studies, coming out of Institute of Management and Finance, Ardent Partners, and some of the other thought leaders out there, that digitization and automation is basically proceeding at a faster clip now than pre-COVID environment.
Yeah, and there is no question that everything seemingly changed during the pandemic. For starters, we have new ways of working. In most cases, organizations are still operating in a remote work environment. More than half of AP teams are still completely remotely working. And there's no telling when or if those accounts payable teams are going to return to the office. And it's not just the way that they're working that's changed. It's also how long AP teams are working. That's also changed. 33% of accounts payable professionals say they're working longer hours these days. 8% of them say they're working more than 2 hours per day more than before the pandemic started. Now, that's really saying something because let's face it, most accounts payable workers were already working very long days before the pandemic. The pandemic's also brought on new operational challenges and new risks. First and foremost among them is that 1/4 of accounts payable leaders say that they're concerned about the fraud and compliance risks that have been brought to light by the way that they're operating during the pandemic. Many organizations are now relying on email to receive and route invoices, to onboard suppliers, and even to exchange information with their suppliers. We've already seen an increase in the number of phishing attacks and business email compromise schemes. And over the next several quarters, it's very likely that we're going to see further cases of fraud as a result of the way that we've been operating. 22% of AP leaders say that they've experienced a significant spike in supplier inquiries. Let's face it, your suppliers have cash flow issues too. And the cost on average to resolve just one supplier phone call or email is about $3.60. Well, I know $3.60 doesn't sound like a lot of money. When you multiply it by all the calls and emails that your team receives in a month, that money adds up fast. What's more, 1 in 5 accounts payable leaders say that they're concerned about missed invoice due dates as a result of the disrupted operations that have been brought about by COVID-19. It's been very hard for organizations to adapt their manual and semi-automated invoice approval processes to this new work from home environment. And so that's extended our payment cycles, and it's made it more likely that we're not going to be able to pay our suppliers on time, not because we don't want to, but because we can't. And 6% of you say you're concerned about a lack of visibility into cash and spend in this new normal. And this is going to be key over the next several quarters as our senior management leans harder on accounts payable for reports to help us manage and navigate this trying economic time. You can't count on that information coming out of your ERP. In many cases, an ERP doesn't provide you with full visibility and full context into what's happening with your cash and your spend. That can only happen when you combine a high level of AP automation with an ERP system. So it's against this backdrop that 19% of AP leaders admit that they're concerned about their current invoice processes. 7% of them say they're just downright overwhelmed. And if that's not enough, today AP departments also face new economic pressures. 62% of businesses have experienced lower revenues because of COVID-19. Most businesses have seen their profitability decline. They've experienced cash flow issues. And 66% of businesses, well, they expect to reduce their spending to deal with all of this. Well, that's going to be easier said than done for many businesses. 1/4 of businesses say that COVID-19 has impacted their organization's ability to manage its spending. It's hard to get visibility into your invoices when, well, they're in someone's living room, virtually, not physically. But when you look more closely at this chart, the picture is actually more dire than it appears on the surface, because 29% of AP leaders say that they're not sure how COVID-19 has impacted their organization's ability to manage its spend. My guess is if they don't know, they probably don't have the visibility they need. And size further complicates matters when it comes to businesses managing this new normal. The challenge of paying suppliers, well, it becomes even bigger as you become bigger. Complicated global and merger and acquisition business structures, well, they're becoming the norm. And the fact is, over the next several quarters, as some of the economic fallout continues, we're probably going to see an uptick in M&A activity. Well, there's already plenty of companies with international divisions and acquisitions and subsidiaries and brands and entities. And many of these companies, well, they've got disparate AP processes that they must manage, like the company structure pictured on this slide. So what do your payment processes look like in this kind of an environment? Well, in a nutshell, they look like a nightmare. Businesses with multiple entities and brands and subsidiaries, well, they have different systems to integrate, complex processes to try and navigate and to manage, and far-flung AP teams working in each of these entities. Just think about the time and the effort just to do PO and invoice matching for each of these entities. Long before you even get to making the payment, you're struggling to collect and validate and track banking information and tax forms and documents for all your suppliers for each entity. Think about the resources required to make payments in local currencies. You got to log into multiple bank portals and you got to manage multiple banking relationships. Think about all the payments that must be reconciled and the hundreds of spreadsheets to do it at this entity level. And then again, at the headquarters level when you try to roll it all up. And many companies don't even have complete integration from each entity to the headquarters to roll up those values for the financial reporting. And so now that financial close at the end of the month or at the end of the quarter, well, that becomes an even bigger nightmare. It's hard to generate reports and get that total view across your entities and your brands and your subsidiaries when you're trying to do it manually. So this is the new normal for businesses. New ways of working, new challenges and risks, new economic pressures. Responding to this new operating model has been a whirlwind for businesses. We had first an immediate crisis response, right? First and foremost, we wanted to move our employees out of harm's way. We wanted to ensure that they were healthy and safe. Second, we needed to transition to new modes of working. We had to arrange for employees to work from home. We had to set up VPN connections. We had to arm folks with laptops in some cases. We had to close our offices, and we had to turn our processes and procedures upside down. And finally, we settled into this operational rhythm. This is where most of us are today. Our employees began adapting to this new normal. Today, most organizations are able to get the work done. It's taking longer, it's creating more errors, it's creating more risks, it's creating more costs, but it's getting done. Where are we now? What's the next step in this transition from the business as usual to business as unusual? Well, now business leaders are starting to focus on how to return to growth. And if you're looking for that, if you're wondering how it is that that's going to happen, well, look no further than the way that businesses pay their suppliers. Before the pandemic, 41% of businesses made at least half of their supplier payments via a paper check. But over the past 4 months, the percentage of AP departments that make at least half of their payments by a paper check has declined by 7 percentage points, just 34% today. Even more incredibly, look at this. Before the pandemic, none of the businesses surveyed by IOFM made all of their payments to suppliers electronically. They were paying at least some of their suppliers with a paper check. Well, today, 3% of AP departments have moved to completely electronic payments to suppliers. There is no question that some businesses had no choice but to migrate to electronic payments during the pandemic. In many cases, it simply wasn't safe for employees to come into the office to cut checks. And it's not like we were going to send everybody home with a check printer to be able to do it from their living room. But there's lots of other reasons that businesses are migrating to electronic payments. They save money, they reduce risk, they provide better service to your suppliers and stakeholders, and it streamlines your settlement and your financial close. No matter the reason, now is the time for accounts payable leaders to strategically rethink the way they operate and to make a commitment to lasting gains. For organizations to survive and to thrive in this new normal, or even this next normal, they have to radically transform their underlying accounts payable processes, and they have to reduce their underlying costs. And you know what? Businesses are going to lean on AP hard to help the enterprise manage its cash and its spend and its risks during this challenging recovery. So for the rest of today's webinar, we're going to outline 4 ways that your organization can use automation to gain back time, money, and control during this recovery. Before we do that, we wanted to do our next poll question, which is about to be displayed on your screen. We want to know, how has COVID-19 impacted your accounts payable department's operations? Is it that all your staff is currently working remotely? Is it that most of your staff is currently working remotely? Is it that all your staff were working remotely, but now you're back in the office? Or is it that your staff never had to work remotely? Take a moment to respond to the poll question now displayed on your screen. We're going to discuss the results in just a moment. So Anand, Have CFOs started to lean on accounts payable to help the business get through these challenging times? Or is that something you see coming down the pike?
No, they have, Mark, in many cases. I mean, you talked about basically how, then eye-popping significant number of AP departments are working from home remotely, and many of them are entirely remote, right? And then the challenges of working longer hours, getting to the reports, the manual processes, and often if you look at it, CFOs and business executives are looking to AP for outstanding invoices and cash flow information. And for many AP departments, these requests for reports generally are a source of high anxiety since they're tasked to physically track down invoices, the payments, and looking through the cabinets and approvers desk. So those are the challenges that they are facing currently, depending on the automation or lack thereof currently. And for the finance department, automating AP generally provides better visibility into your payment due dates, early payment discounts if you have to take those, and late payment fees, and of course automating, your basically your paper checks and all the costs associated with it. So those are all the plus points that you look at it. And as you see on the study, basically on the results of the study, most of the staff is currently working remotely. So a majority of them are still working remotely, and that validates the IOFM study that you were quoting earlier, that a significant portion of them are still remote and the challenges remain.
We asked our attendees, how has COVID-19 impacted their accounts payable department's operations? Half of you say that most of your staff is still working remotely. 29% of you say all of your staff is currently working remotely. 79% of you have at least some of your AP staff working from home. Anand, is it a case where our old ways of processing invoices and paying suppliers simply won't be able to adapt to this new normal? Is that approach done now?
I think to a large extent, yes, Mark. I mean, that's what we are seeing from the studies, and the studies generally are a lagging indicator because you're doing it in many cases not real time. You're looking at the results. So as you move along, in my estimation and opinion, and anecdotally as well, those are going to go away. I mean, current states of automation, and what I would highly recommend to the folks is just not look at the pieces of automation, like maybe automating your invoice processing. Look at it end to end. And there are current systems out there that can automate your payments or payable solution at least 80% of the way there. So straight through invoice processing or touchless invoice processing with automated payments, with approvals that you can do online and everything. And of course, it's a lot better basically to get visibility into your cash flow. It speeds up the process. You get much more, visibility into entire processes per se, but also from the perspective of, basically looking at it from the global perspective as well. You talked about the challenges in the multi-entity environment, right? So all those things are going to slowly go away, if not right now.
When it comes to giving your business an edge in a turbulent economy, accounts payable might not be the first place that you would have thought to look. After all, for years, accounts payable has been the quintessential back office function. We were the people in the basement with the hand-me-down office furniture and the coffee pot that didn't work so good. The only time anyone called accounts payable was when something went wrong, when somebody didn't get paid. But that's all changing. Organizations recognize that by optimizing the way they pay their suppliers, they are not only able to achieve operational improvements, they're also able to move the needle on the things that matter most to the business. And to accomplish all that, well, there's 4 strategies that organizations ought to take. The first one is that they need to optimize work from home. Let's face it, there's no telling when organizations are going to bring their accounts payable teams back to the office, or whether they're going to bring everyone back ever. Most finance departments, well, we made a smooth transition to a remote working environment during the pandemic. And that's no surprise when you consider that most finance departments, well, we had some sort of cloud-based systems or on-premise systems that could be accessed remotely through a VPN. But moving forward, well, the stakes are raised. employees may be asked to work remotely to ensure social distancing. The success of work from home during the pandemic, well, that might also embolden some organizations to offer more flexible work arrangements to employees. And some organizations are likely to offer remote working arrangements to recruit new talent to the office. Think millennials. And over time, well, let's face it, some businesses are probably going to downsize their office space because of the success of these work from home arrangements. So the challenge for accounts payable departments will be to use the lessons we learned from our work from home experience during the pandemic to achieve sustainable results during the new normal and the next normal. Only 66% of businesses surveyed by the Association for Financial Professionals believe their finance and accounting team has the processing flexibility they need to be effective. Fewer businesses believe their finance and accounting team has the operating infrastructure they need to provide timely and insightful forecasts and analysis, that reporting that Anand just spoke of. And the approaches to paying suppliers during the pandemic, like working longer hours or routing invoices via email or putting workers in harm's way to open mail and print checks, well, that's not sustainable either. So we need a better approach over the long haul. And that's where automation comes in. Automation optimizes work from home arrangements. Digital workflows, well, they don't require staff to be in the office to receive or approve invoices. Staff can electronically collaborate with suppliers and internal stakeholders, such as the folks in procurement, to resolve exceptions. Online portals, they allow suppliers to submit invoices electronically, to securely provide their contact information and banking details. For goodness sake, stop using email for that stuff. And to check on the status of invoices and payments, so you don't have to pick up the phone or send off an email. Built-in governance controls and even audit trails, well, they assure accountability and security no matter where staff work. And unified real-time visibility, it enables accounts payable leaders to manage their operations across multiple geographies and business units, whether your team is across town or across the country or across the globe. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, which of the following working capital management strategies does your organization currently use? Is it taking advantage of early payment discounts? Do you use supply chain financing? Do you earn cashback rebates on virtual card spend? Are you extending your standard payment terms, or are you using predictive analytics of cash flow? Take a moment to respond to the poll question now displayed on your screen. We'll discuss the results in just a moment. So it might seem strange to start talking about working capital when it comes to accounts payable, Anand. After all, that's somebody else's problem over in finance or over in treasury, isn't it? But the fact is that more AP departments are being tasked with developing strategies for working capital. Isn't that true?
Absolutely, Mark. I mean, but there are numerous ways to basically exist, that there to free up your working capital from the AP perspective, right? If you look at the effective payables management, which generally enhances a company's short-term cash flow position by designing an optimal timing of payments to your suppliers. And essentially, you can transform your AP from a cost center to a profit generator, or at least generate some amount of revenue. And you can actually increase your savings by capturing early payment discounts, collecting cash back from virtual card payments like you showed, and then saving on processing costs with more automation. So these are some of the ways that you can essentially do it. And you may have an automated function, but there are ways that you're paying which isn't fine-tuned for maximum savings. So with proper plan that takes into account, different timings and payment methods for various invoice types and supplier types, you're generally missing out if you don't maximize on it on accurate cash flow forecasts and new ways to generate more profit and opportunities to benefit suppliers, but also to put cash back into your company as such.
Many organizations are obviously taking a hard look at their payment terms so they could try and preserve their cash on the balance sheet during these tough times. This is a great opportunity, Anand, to also take a look at the way you're handling discounts and supply chain financing and cashback rebates, no?
Absolutely. I mean, if you're not taking advantage of cashback rebates by early payment discounts, et cetera, you're losing out on basically creating revenue or generating some amount of revenue or cash flow for your company with early referral fee from your AP operations, and then maintaining the cash neutral position in many cases with generally no impact to your the DPO or working capital in some extenses, right? You're improving your cash flow, maintaining the net current terms by better negotiation, or even extending the terms with your suppliers. And with the manual system in place or semi-automation, that's not possible in many cases. It only happens through automation.
And it appears that our attendees are availing themselves of all of these working capital tools, which is exactly the right approach, because the second strategy to giving your business an edge in the tough economic times is to deploy smart cash controls, to deploy all of the strategies that we listed on that poll question. Navigating the economic fallout of the pandemic, well, it's going to require you to manage your cash flows efficiently and to minimize spend and working capital risks. And your business is probably going to count on you to help do this. It's going to look for you to provide ways to manage liquidity, to understand cash and spending, to model cash flow needs based on real time and historical data. And many businesses will make cash forecasts and spending forecasts a key part of their reporting. So providing timely and insightful analysis and forecasts, well, this is going to be critical, but it's also going to be hard for a lot of you. The root of the problem is that only 66% of finance and accounting teams have the systems and tools they need to do forecasting and analysis. Another reason that many finance and accounting teams struggle to deliver these insights, well, it's that they rely on spreadsheets for reporting. 40% of accounts payable departments deliver their reports to senior management in an Excel spreadsheet. Folks, stop the madness. Spreadsheets are hard to manipulate. Information must be manually downloaded into multiple non-integrated sources. It takes a long time to create spreadsheets, and the information becomes outdated the moment that you hit save. Automation gives you a better approach. It puts cash controls at your fingertips. Real-time data around crucial business metrics, well, that informs and accelerates decision-making. Senior management, they can leverage your data to quickly model financial plans that reflect whatever's going on in the economy at that moment in time. It also can reflect what's going on in your business at that moment in time, because real-time visibility into all your supplier expenses, that helps them stay on top of their costs, not just their cash. And the business and insight tools and automated accounts payable processes, well, they can monitor key performance indicators, KPIs, so that you're able to identify red or yellow flags in your business so you can take proactive action, so you can head off bottlenecks, so you can keep suppliers getting paid on time. Purchase order matching and purchasing workflow automation, that helps you curb spending. Automation also helps businesses generate rebates through accounts payable. Now, let's face it, freeing up cash is critical during an economic downturn. You need cash to pay off debt, to reduce borrowing, and to make the strategic investments to help you position yourself for the recovery. Automation helps a business optimize its payment terms. This is a key cog in making all of this work. In tough times, it's not uncommon for businesses to adjust their payment terms. But what you need to do is do it strategically. And this will give a great incentive for suppliers to accept electronic payments. Suppliers willing to accept e-payments, well, you offer them shorter payment terms than those suppliers that insist on receiving paper checks. And when you adjust your payment terms in this manner, well, it's a proven way to migrate suppliers to more desirable payment methods. It's a carrot, it's not a stick. An easy way to standardize your payment terms is to coordinate them into your purchasing process. So you can have this discussion up front with suppliers and not try to have it on the back end when it's harder to make changes. One benefit of extending your payment terms is that it opens the door to more opportunities to capture early payment discounts. 80%, that's right, 80% of suppliers are willing to exchange a discount on the amount due on an invoice in exchange for earlier payment. And you better bet your bippy that that number isn't declining in this economy. Now, what early payment discounts do is that it allows you to cash in on this need by suppliers to accelerate their payments. Let's look at a common example of an early payment discount. Now, while every organization is going to be different, this calculation illustrates the potential value of taking early payment discounts in this scenario. So as you can see, a company with $50 million in spending can generate $100,000 in early payment discounts based on just a standard 2% discount and just 10% of its spending being discount eligible. Now, these types of savings, they're appealing in good times and bad. Now, there's a few notes here. Before rushing to accept early payment discounts, well, you got to consider your cash flow and your cost of funds. Discounts don't make much sense if you need to borrow cash in order to pay early. You also want to be mindful of interest rates. And the interest rate environment has changed a lot in the last couple of months. So this is something you want to calculate first. So how do you find out if your suppliers accept a discount? Well, in many cases, these discounts are right on the invoices themselves. In other cases, well, you can negotiate these with your suppliers, either at the time you're setting up a contract with them or on an ongoing basis. This is why you definitely want your purchasers involved in your payments and automation discussions. A critical element to being able to take advantage of early payment discounts is being able to obtain approval for the invoice prior to the discount term expiring. In many cases, well, our invoice approval processes are so darn slow that by the time we've approved the invoice, the window is slammed shut for us to get any sort of a discount. So you need to have a streamlined approval process. Now, some of you might be wondering, well, what happens though in cases where we don't want to use our own cash for an early payment discount offer? Well, that's where supply chain financing comes in. In this case, a third party, such as a bank or an investment firm, well, they'll pay the supplier early, and you don't have to pay this third party until you get to the invoice due amount. The best part, your supplier is able to accelerate their cash flow, and you're able to get some revenue share from the third party, all without impacting your balance sheet. If you find this type of working capital benefit compelling, well, you're not alone. More businesses are recognizing the strategic impact that payments automation can have on a business. 57% of businesses expect to earn more card rebates within the next 3 years. Now, that's a staggering number, but studies show that the use of card programs for paying suppliers, well, is growing more than 20% a year on a compound annual growth basis. 52% of businesses, they expect to capture more early payment discounts. And when you think about the fact that 80% of suppliers are willing to offer early payment discounts, and the fact that most businesses aren't capturing most of the early payment discounts they're already offered, there's a lot of room for growth here. And 34% of businesses, well, they want to extend their standard payment terms. And this is something I think you'll see over the next few quarters as businesses navigate the economic fallout of the pandemic. And that brings us to our fourth poll question, which is about to be displayed on your screen. This time we want to know, how would you describe your organization's current level of automation in its accounts payable processes? Is it that your AP process is fully automated with few or no manual processes? Is it that your AP process is largely automated and in the process of automating further? Is it that your AP process is largely automated, but you have no plans to automate further? Is it that your AP process is not very automated, but you plan to automate more during the next year? Or is it that your AP process is not very automated and we have no plans to automate further? Take a moment to respond to the poll question now displayed in your screen, and we'll discuss the results in just a moment. So Anand, during a tough economic time, it's tempting to say we're going to slam the brakes on automation projects and try to hoard our cash. Why is it that AP automation should not be one of those projects that get put off to the side?
Mark, that's a great question, and we get that on a regular basis. And one of the key reasons is for all the reasons that you discussed in the webinar currently, but also there are systems out there that can have you up and running within just a couple of months, automate your end-to-end system, and all the advantages that you mentioned, basically starting from your processing of the invoices to approval, to seamless payments, to reconciliation with your ERP systems, all that can be had at basically minimal costs. So if you look at a SaaS-based software environment, there's no need to put up a lot of capital up front. You can do on a subscription basis as you go along, and the results or the ROI is basically significant. So the payback period that you get with these systems is actually a lot less, a lot shorter. And automation is not just for larger companies anymore. So that is one of the key reasons to do it. And this is the time actually to double down, to look at your processes, to take a hard look at where there is slippage, where you can generate additional revenue with all the early payment discounts that you talked about with supplier chain financing. So all these are reasons to automate now, actually.
And it looks like most of our attendees agree with you, Anand. 2/3 of the folks on the line say that they have plans to automate further. Interestingly, 39% of the folks on the line, well, they admit that their AP process is not currently very automated, but they plan to automate within the next year. 27% of our attendees say their AP process is largely automated, and yet they plan to automate further. Does this surprise you?
Not really, no, Mark. I mean, if you look at the mid-market segment, you find companies that are fast growing, but still have not automated basically their processes, and they're looking to do it, but they keep postponing it for the reasons that you heard. And there are other companies basically that wait because if you look at, the questions that you get from your management, everything is already running smoothly. We are not big enough. We don't have the resources or the budget. These are some of the challenges, but it's actually not a fact, right? If you see the numbers and the operational and the cost savings that you generate from automating, it's significant. And there is no need to wait. There are systems out there in the market that can automate 80% of your payables process. But this is good news to see that a select group of attendees have automated to some extent their payables process. And it depends on how much and what type and what level of automation that they have as such.
And as our poll results suggested, it is time to modernize your accounts payable function. That's the third strategy we have for gaining a competitive edge. Those hard lessons we learned during the pandemic are going to be the impetus, and for some of you, the business case to move forward with accounts payable automation. Many of us struggled to pay invoices on time during the crisis because of difficulties in adapting these outdated manual processes to a remote working environment. Organizations experienced a spike in supplier increase. We have not enough visibility. We have costs that are too high, and we've got productivity metrics that are completely out the window. And this is not new news for a lot of your organizations. The fact is there's a lot of interdependent tasks that go into getting your suppliers paid. You need to onboard suppliers. You need to keep your vendor master file up to date. You need to stay in compliance with tax regulations. You have to keep track of approvals for invoices. You have to deal with currency conversion issues for global payments. You have to communicate with suppliers about the status of payments. You need to reconcile payments. Holy cow, the list goes on and on. In a manual and semi-automated environment, this is all really, really time consuming. And let's face it, AP isn't just about paying the bills, which is the common perception many people have about us. It's all of these processes together that in many cases we're doing manually or in a semi-automated fashion. Not only is that inefficient, it adds risks to the process, the risk of human error, the risk of being out of compliance, the risk of failing an audit, the risk of fines and penalties. This environment can't stand. 71% of businesses surveyed by IOFM, well, they plan to automate their accounts payable function further in the next year. Even those organizations that are largely automated have plans to deploy more technology, just like the findings of our poll today. Only 6% of businesses have thrown in the towel and said they won't budge from their manual AP existence. These are the folks who are going to fall behind their competition. These are the people who are putting their company at a disadvantage at a time when their business is going to need every edge it can take to get through this unprecedented time. Automation can't get here soon enough for most of us. While consumers have largely ditched those paper checks in favor of electronic alternatives, checks still represent a significant percentage of business-to-business payments. 81% of AP departments say they still make some portion of their supplier payments using a paper check. What's surprising to me is how dissatisfied most businesses are with paper checks. Look at this chart. Compared to other methods of payment, paper checks rank 8th in satisfaction, ahead of only cryptocurrency, which most of us don't even understand. And checks have a below average satisfaction rating. Interestingly, new payment methods, things like same-day ACH and e-payables, well, they enjoy a much higher level of satisfaction than paper checks. And one reason for all of this is that checks cost a lot of money. Studies show that it costs $5.95 on average to pay a supplier with a paper check. This includes the considerable cost for paper check stock, postage, envelopes, wasted employee time, and monthly maintenance fees. And when you consider all the time the businesses spend chasing down check information, the money spent on bank fees to replace lost checks, and the losses associated with check fraud, well, the real cost of paying suppliers with checks, it's considerably higher. And the fact is, nobody has time for all the manual steps associated with paying suppliers with a paper check. Across the AP lifecycle, AP professionals are bogged down by lots and lots of manual processes, all the while trying to comply with dozens of business rules, best practices, regulations, and auditor guidelines, and keeping our heads above water in this nasty economy. 84% of the typical accounts payable practitioner's time is spent on manual processes such as those listed on this slide. In fact, AP managers often spend more time on heads down transaction processing than on the managerial tasks they were hired for. No wonder we think AP is a drain on company resources. But with an automated accounts payable solution, staff only need to intervene when necessary. The result is a process that can scale along with your business. So accounts payable must automate the way it operates to eliminate manual tasks. It must modernize. CFOs, well, yeah, they're going to argue that now's not the time to invest in automation. It's the time to invest in liquidity and cash flow. Well, There's no question that a strong cash position is going to be critical in the months ahead, but the right software solution can deliver productivity improvements while strengthening those cost and working capital controls. And the best part is that a modern AP solution can be up and running quickly and with minimal upfront costs. So what is it that you should look for in a modern AP department? What's different than what you're currently doing? Well, these are some of the attributes of a modern AP function. Best-in-class AP departments, well, they already know this. They've already taken steps to modernize their operations. They have freed up their staff to focus on value-added activities such as data analysis, the things that will help your business grow. And that brings us to our fourth and final strategy for giving your business an edge. It's reducing operational risks. The possibility of fraud and compliance risks are heightened when operations are disrupted. And there's no question that manual and semi-automated invoice approval processes raise your level of risks. Email routing of invoices is not secure. There's no segregation of duties. There's no chain of custody assurance. Tracking of actions is nowhere to be found. There's no ready access to audit information. And document images, well, they could be deleted prematurely. With payments fraud already at an all-time high, you can't afford this additional risk. And that's a big reason that businesses rank traceability as their top priority in the new era of payments. And that's ahead of hot button issues such as ease of reconciliation, cost, and speed. What you need in your organization are enterprise-grade financial controls. Mitigating risk starts with automation. Regularly evaluating your financial process, well, that's going to help you uncover potential vulnerabilities. But automation can help you maintain strong controls in the new normal. You want the types of controls that are on the screen. You also want the ability to check suppliers against blacklists before a payment is made. In the past, screening vendors for anti-money laundering compliance, well, that's been an afterthought. But in the future, you're going to need these tools. The message Anand and I want to leave you with today is that accounts payable can play a big role in helping your business thrive in the post-pandemic recovery. But accounts payable, it's going to need to rethink the way it operates. It's going to need to reduce its underlying cost structure. The perception of accounts payable already is growing within businesses. Many senior managers now see AP as being very or exceptionally valuable. This is a far cry from where we were just a few years ago. But to help the business achieve its growth, you're going to have to find ways to ensure that work from home is productive, that you apply smart cash controls, that you modernize your processes, and that you mitigate risks. Automation makes this happen in the short term, and it sets your organization up for long-term success. Because it's not just about taking costs out of the AP function. When you have a fully automated AP function, now you're able to scale faster, to help increase cash flow, to extend DPO, to help the business lower its cost of goods, and to avoid supply chain disruption. You don't want to just survive the pandemic. You want to thrive in the post-pandemic economy. And accounts payable automation is the way that your business can do just that. So you might be wondering, how is it that I can future-proof my financial operations? I can set my business up for success. To tell us more about that, I'm going to hand it off to Anand. Anand?
Thanks, Mark. That was an excellent presentation, lots of great information. And in this section, I will provide a quick overview about Tipalti. So Tipalti is a leading global payables automation system for fast-growing companies with hundreds of customers, some of which are listed on the slide. So we take pride in serving our customers and are proud to have a 98% customer satisfaction rate. And more than $11 billion is transacted annually through our system for well over 4 million payees around the world. We are a licensed money transmitter and a regulated financial institution, so we are subject to strict scrutiny by the US government. And we are amongst the 61 companies, which is basically listed in both the Inc. 5000 and Deloitte 500 list as well. But our name Tipalti actually means that we took care of it, which essentially implies that let us take care of your global payables operations, which then allows you to free your time and your staff on more value-added activities so that you deliver the best quality of work, basically. If I may ask you to move to the next slide, Mark. Yeah, so this is the Tipalti wheel, which highlights our philosophy that if you put a robust system in place now, you will not outgrow it as you scale. So as you can see, we provide an end-to-end solution to manage the entire payables operations. And it starts at the top with supplier management, with self-service onboarding, which includes over 26,000 rules which are built in to validate and ensure that payment data is captured accurately. And you can white label the supplier portal so that your brand is up and center in front of your suppliers. And we have a KPMG certified tax compliance engine that identifies and collects correct tax forms, such as the W-9s and W-8s, and generates the 1099 and 1042S tax prep reports at the year end, and also calculates any necessary year-old withholdings as well. And these are all actually built into the system. It's not that you're plugging and playing with a different system. It's all built in. And as the suppliers are onboarding, they collect the information, the payments, the tax information, etc. And the solution also includes invoice processing with OCR technology and machine learning to basically ensure a touchless or straight-through invoice processing with advanced approval controls that are built in. And we also have 2- and 3-row PO matching for PO-backed invoices. Like I mentioned earlier, we are a licensed money transmitter and pay across 196 countries and 120 currencies with 6 different payment methods. Mark talked about the importance of sanction screening. So we do that to ensure that you don't pay anyone who's on a terrorist watch list if you're paying a global supplier somewhere or listed as a money launderer. We have robust reporting with more than 20 out-of-the-box reports and real-time multi-entity payment reconciliation with your accounting and ERP systems. And NetNow that you see on your screen is our built-in early payment solution. And you can generate revenue by paying suppliers earlier without adding to your workload or impacting your working capital. And the last capability that I want to highlight is our multi-FX or intercompany bank transfer that you see on the bottom in the service foundations area. So you can save time and money on foreign exchange conversions. So it's ideal for companies with multiple entities who are paying in different currencies globally. So essentially what Tipalti does is it converts the currency that it's funded into subsidiary currencies and processes those payouts. And all this is built on the Tipalti platform, and which ensures basically proper financial controls and compliance are in place. And Mark talked about the importance of having enterprise-grade security, compliance, and controls in place as well. So that, in a nutshell, is about Tipalti.
Thank you so
Mark, back
much.
to you.
Thank you so much, Anand. We have a number of questions from attendees. If you haven't sent yours in yet, we encourage you to do so using the online screen. Anand, one of our attendees wants to know, what advice would you give for evaluating potential AP automation solution providers? There seems to be a lot out there. How can I tell the leaders from the also-rans?
Sure, and we are one of them, and hope you consider us. So it's a pitch basically that I'm making. But what I would say is, Mark, it's up to you to determine the best solution for your organization and identify the potential weaknesses or deficiencies that affect you currently. And doing your homework will essentially mitigate the risk of the product not living up to your expectation or costing you in hidden fees as such. Like you said, there are multiple providers out there. So the things that you should be asking are, does the solution address the challenges of my processes? Will it scale with my organization, right? So is this a solution that is easy to use, and does it integrate with my accounting or ERP solutions? We talked about the importance of a quick financial close, right? You don't want to do it manually towards the end, which adds to the workload, not only from your side, but then again, it's affecting, closing the books basically from that perspective as well. And the other question that you may look at is basically, does the solution automate all aspects of the invoice to pay process, not just a piece of it, but the end to end? And I can tell you from our perspective and the systems out there in the market, that automate about 80% of your payables workflow. And then the other question that you might ask from the technical perspective is, what does the implementation look like? What does the training look like? What does the support look like, right? The deployment support, training, technical support. And lastly, will they help me build a business case to sell this to my management team, right? That comes basically up front because you are looking at numbers. You are looking at how to build a business case so that you can go back to your management and say, these are all the challenges and these are all the benefits of automation. And at Tipalti, for example, we have an ROI calculator that helps our teams basically build a business case with you. And it's quite easy and quick, and we get the ROI in a nice and presentable format to actually share with your stakeholders.
Anand, another attendee writes, how hard is it to deploy a solution like this when our IT resources are stretched thin and all our AP staff is working from home?
Great question, Mark. And we actually are experts in this, and so are a lot of the other providers in this. So with a cloud-based solution, generally, as most of the people know, there is no software or hardware to buy, install, maintain, and upgrade. It means that you can be up and running quickly. And generally, most of the solutions in the cloud-based are very simple and intuitive. So getting the staff trained and ready to up and running quickly is relatively easy. And any reputable cloud provider will give you all the support you need, right? So the basic thing is you need to build a business case, get some proof points, get some user cases and testimonials, and then look for a provider with the questions that I highlighted earlier, whether they are able to manage your accounts payable process and how soon they can have you up and running. I mean, I can talk, it can be a whole separate webinar on the deployment and the support and the processes that go along with it and what kind of support we provide from that perspective, but that's for another day, I think.
And that will be our final word. Anand, thank you so much for sharing your insights today. And thank you all for joining us. And with that, I'm going to hand it back to Sean. Sean.
Hello. You guys. Hey, Mark, you there?
We're here.
Okay. Ladies and gentlemen, I would like to thank our presenter for today, Mark, and the team of Tipalti for such a wonderful and informative presentation. So thank you so much, guys, for that.
Thank you so much for having us.
Thank you, Sean.
It was an honor. Okay. And an evaluation form shall be sent within 24 hours of completion of this webinar to only those attendees who have answered all the polling questions. And it is also required for you to complete the evaluation form in order to receive your credit certificate. So I request you all to please wait for the same and claim your credit certificate, wherein if you need to view the recording of this webinar or if you have any further questions, please reach out to us on support@my-cp.com and we'll provide you the link to view the recording and we'll assist you better in all regards. So thank you so much, everyone, for being such a wonderful audience. Keep coming back. Take care of yourself and your loved ones. Have a great day ahead. Thank you so much. This is your host, Sam, signing off.